San Diego real estate inventory is at its highest point in 5 years, but pending sales are actually holding steady.
Let's check out what's happened over the past few weeks, and then we'll zoom out to look at long-term trends. All right, let's check out this month-over-month overview.
Okay, yes, looking at April to May of this year, we have a 1.1% increase in new listings, so that's basically flat. Pending sales are actually up 3.9%, which is a little better than flat. Closed sales down 6.7%. Days on market is even, so that is not really climbing at this point. Median price is up 0.1%, so also flat. And the number of homes for sale overall is up 8.6%.
I added that metric in there. We hadn't talked about it for a while because every time it was just like, it's really low, but now inventory is building. So I stuck that back in there so we can continue to monitor. All right, let's check out some long-term trends and we'll get started with new listings.
Okay, yes, new listings. So detached homes, there were a few less new listings this May than last May. A few more condos. Year to date, we're up just over 1,000 units on both attached and detached. So I mean, yes, there are more new listings, but it's not a tremendous amount. I've seen a lot of stories in the mainstream media about climbing home inventory in San Diego, and it is going up. It is at a 5-year high right now, but it's just not that much. It's more dramatic when you start with nothing and add something to it.
And you would expect more people to be listing their homes in the springtime, but we're not seeing a huge spring surge, although we are seeing inventory climbing. We'll get more into that, but it's more of a
It's been more gradual, and yes, there's more inventory out there, but it's just not like the flood of inventory that people think it might be. And looking at this chart historically, I mean, look at where new listings have been by month over the years since 2012. Here, they've been very, very high. I mean, almost. I mean, we see some months here where we're well over 3,000 new listings a month.
And that's detached.
So. Yeah, detached, and then attached here, we've got the same kind of trend. And then when you get to about 2019, things start to taper off in terms of the number of people listing homes. So yes, it's up and at essentially a 5-year high right now. But even if you go back those 5 years, if you go back 5 years before that, it was much, much higher.
All right, well, you're kind of spoiler alerting our inventory chart, so don't give away all of our big reveal on the inventory. But
okay,
let's move on to closed sales before you say too much.
Okay, well, I almost always say too much.
Okay, well, I'm stopping you there because we won't have anything to say if we get to the inventory slide.
Oh, I'll find something to say.
Okay, let's move on to closed sales.
All right, so closed sales definitely down on both attached and detached, although year to date, look at that.
Like, oh my, that's
practically flat.
Yeah.
I mean, it's like, and the year before that. So we're closing the same amount of real estate as we have been for the past 3 years here, and the numbers don't lie. And again, looking at this historical chart, it's just way, way lower than it's been historically. And ultimately, more people work when homes are closing, not just realtors, not just lenders, a lot of ancillary services.
And plumbers, electricians, termite guys, carpet cleaners, window folks. I could go on and on.
Yeah, you can go on and on. Roofers, I mean, you name it. More people work when there's more homes selling.
Escrow folks, title people.
And there's a lot less of those than there have been historically too. So
chimney sweeps.
Sure, even though things are at a high level with inventory, it's still not what it used to be.
Did I mention carpet folks?
You did.
I did, okay.
Yep.
Or whatever kind of flooring you like, they all work too.
Both carpet steamers and the chem dry folks.
Okay, all of them.
All of them.
All right, let's talk about median prices.
Yes, median price. So for May of 2023, 24, and 25, median prices took a big jump between 23 and 24 and are basically flat here on detached and basically flat on attached properties. And year to date, we're up a tiny bit on the attached side and 2.3% here on the detached side. So yeah, median price is basically flat. And again, as we've been saying over and over again, 2022, 23, and 24 median price went down in the second half of the year and then rebounded in the first half of the following year. So median prices have been doing this up and down thing, but overall up slightly.
Well, we'll see what happens as the spring surge continues.
Yes, indeed. Yes, indeed.
So I know you've been waiting to talk about inventory, and I appreciate you holding back. I know you wanted to tell the whole story then, but let's go ahead. Let's go ahead and finish talking about inventory. Now, we haven't used an inventory slide for a while because, like I said before, it wasn't too interesting for a long time. It was just super low, and it's still low, but not as low as it's been. And someone asked us last week, is inventory the highest it's been since 2008? Short answer, no, but let's talk a little bit more about that.
Yes. I mean, go ahead.
So if you look back at historical data, the San Diego Association of Realtors only started keeping track in their records of inventory since 2013. So we can't really go back and look at the data for how many homes were on the market in 2008. We can look at sales and compare that, which we will do. But we do have this chart that goes back to 2013, and we can see inventory has been much higher in the past. Go ahead. I know you've been waiting to talk about this, so I'm going to give you the mouse and you take it away.
Sure. So, I mean, the last 3 years, it was ridiculously low in 2023, and it rebounded a bit in 24. And of course, in 2024, the headline could have been home inventory rises by 50%. And that would have been a dramatic headline, but it was still low. And now 24 to 25, it's up another 25%. And when you combine attached and detached, currently we're just over 6,000 units, which is as high as it's been since 2019. And this is pre-pandemic. Look what happened in 2019. It just fell off a cliff. And, the reasons for that are multi-layered and you could speculate as to why that was. Interest rates were still low.
It fell off the cliff before rates started to go up too. So
Yeah.
there were many different factors that went into this dropping off the cliff. But I looked back through the numbers, and the last time that inventory was more than 6,000 was in September of 2019, and you can see there that's after the cliff falling and before it continues the dip.
Right. Yeah. So I mean, people's home buying and selling, well, mainly their home selling habits, moving habits changed drastically in 2019. And, I did go back and look at 2008, 9, 10, 11, 12, because SDAR does go back as far as 2013.
Yeah, we don't have inventory data back to 2008, but we do have sales data, how many homes sold, what the prices were. So how does that information compare to what's happening right now?
Well, for instance, in 2008, there were 32,900 homes sold in San Diego County. And that number was basically the same. 2009, 34,000 in 2010, 34,005 in 2011, 35,000 in 2012.
So those are kind of similar numbers.
Yes. And then in 2013, it spiked up to 36,000.
And that's where our chart starts here.
Right. So,
well, how about last year? How many homes sold last year?
24,000.
Okay,
so a
that's,
lot less.
That's quite a lot less. So many less homes were sold, about 2/3 the number of homes were sold last year than in 2008. So if you can kind of extrapolate, that there were more homes on the market for more sales to happen, then you can say, compare.
It's just impossible to go back and track that data month by month the way that it's done here when you don't have the number. All you can do is see how many homes were listed during that period, and then some of those homes were expired and canceled, but you don't know how many of those expireds and canceleds got relisted and then sold. You could figure it out, but it would be quite an exercise.
But you can see from this chart that there have been many years in recent history where inventory was much higher than it is right now.
Absolutely. So the bottom line is inventory is as high as it's been in 5 years, and that's a fact.
Still somewhat historically low.
Right.
All right, well, let's take a look at what's causing many of our problems these days, interest rates. Let's check out what's happening by looking at the Freddie Mac Primary Mortgage Market Survey for this week.
Yeah, so this week we ticked down just a little bit, 6.85%. And I was talking to an investment advisor at one of the large investment places this past week, and they're predicting rates going down by the end of the year into the high fives or low sixes. And we've been hearing that for a long time.
Well, I hope these experts know what they're talking about. We've been hearing a lot from experts, but hopefully these folks are the ones that are finally getting it right.
The bottom line is we can't tell you when rates are going down. We know that they've been hovering right around this level for a very long time. And, if they do go down by the end of the year without the Federal Reserve buying a bunch of treasuries, then that's probably a pretty good sign for the economy. But we just don't know yet. So high rates are keeping a lot of buyers either on the fence or just out of the game entirely because they can't qualify, and it's keeping a lot of sellers in homes. So while inventory is rising, I don't think we're going to see those historically high levels unless rates really come down and people start moving like they did before 2019.
Locksmiths and landscapers.
Those are two.
More folks who make money when people buy and sell homes.
Right.
Sorry, that was a little bit of a non sequitur.
That's okay. I think if people watch the whole thing, they get it. And if you did watch the whole thing, thank you very much.
All right. Well, yes, thank you for watching. We hope you all enjoyed the video. If you did, please like, share, subscribe, and comment, and we'll see you next time.
Bye-bye.